Greetings everyone, Joseph James here, SchoolTrade.com. It was June 11th, 2010. Happy Friday to you. Here's your live trading recap. Hope you guys had a great day in the room today. Before we talk about the trades we took today, guys, I want to remind you guys we have a ton of free resources on our blog. The link for the blog is right below the video. While you're on the blog, don't forget we have a search box there in the upper right-hand corner. Use that search box. That way you know where everything is in the blog. We have articles posted there, videos posted there, guys, and don't forget, post your feedback on the blog, post your questions on the blog, and if you have any questions, guys, drop us an email about it. Let's see how we did here today. 2, 4, 5 total trades. We got one stop loss in there. Now, Fridays are usually pretty good. We've had some pretty good Fridays for the past couple months, but Fridays have a tendency of being really slow. Now, today's Friday felt kind of like a summer Friday, and we'll talk more about that in a second here. But as you can see, though, $395, 37 ticks. We took some breakers, took some two-steps. We got a crude, euro, Russell. We got everyone involved today. Okay, but the big story here today is, guys, that's $5,000 this week, 5,300 USD on only 4 contracts. We've got 8,600 USD for the month, guys, and we're now just shy of $60,000 for the year here. Now look back in time here, right? We've done really well over the past couple Fridays. Last Friday we 1,800. Before that we did 980, right? We did 960, 1460, guys. A lot of big Fridays here, but today was a little bit of a quiet Friday. Of course, I think what happened today was I think most people might have been watching the soccer matches already for the World Cup, enjoying the wonderful weather we have here in the U.S. this time of year. Whatever the reason is, guys, the markets really looked quiet today. So Fridays can be hit or miss. Sometimes we'll get lots of volume, sometimes we won't. Today felt like one of those days, though. The key was, we talked about this today in the room, is you got to trust your instincts. You've got to trust your ability to look at the market and identify the market as potentially being a pretty tough day. And we of course looked first at the dollar today. We start with the dollar and we look at our slower time frames, and our slower time frames really told us today, yeah, we might be better off in the golf course this morning. Okay, so let's take a look at the slower time frames first on the dollar. And of course then we'll look at some other markets as well. Now what I noticed right away in the dollar here is that we have trend lines, right? Trend lines from the downsides, from the upsides, and where are we? We are right in the middle, right? We're right in the middle. Now we know, of course, that trading in the middle is much higher risk. Now this is a very slow time frame. So our slow time frame is going to tell me when I see us right in the middle like that, it tells me everything I see today is probably going to be a little bit higher risk, because this is the bird's eye view, right? This is the big picture of the market. Now we usually tell you guys to watch the short-term trend on the fast time frame, right? And of course we talked about that yesterday in training, where we said, which is more important, watching the fast time frame or watching the slow time frame? Well, of course, the fast time frame is more important for the trades right now, right? That's what I want to see. I'm going to watch my fast time frame for my slope, my trigger line. Do I have 6 ticks of room? Do I have enough speed and size, right? I want the fast time frame to really confirm. Now, we're looking at a slow time frame here. Now, a slow time frame is going to give me that bird's eye view, and how I'll use it here is I'll say, okay, if we are right in the middle of this bracket, we've got trend lines coming up, trend lines coming down. Okay, so we're going to have the buyers pushing up from the bottoms, right? The sellers pushing down from the tops. And so we expect, of course, price to get relatively consolidated here. Okay, and of course it did. So how do we treat this? Well, that means today I'm going to consider everything I'm watching today to be relatively higher risk. The dollar is in the center. It's in a wedge pattern. So the slower time frame will kind of give me this blanket idea that everything will be higher risk today no matter what I see, because we are in the center of this broad sideways range. All right? Now, we weren't too concerned until we started looking at other markets. Now let's look at some of the other popular markets we trade here, and we really begin to see now, yeah, this may not be a very easy day for us today. Okay, so once again, here's the euro. What do you see here? Same thing. We're in the center of the bracket. We have trend lines up and trend lines down, and you can see that wedge pattern here, right? We are kind of locked into this little wedge pattern area here, and what's going to happen is this is going to be very choppy until it breaks up or breaks down. So the euro looks almost identical to the dollar. Okay, we'll keep moving. Here's on gold, right? Gold, almost the same exact thing, right? Right in the center of the range, sideways in the center. That tells us, obviously, expect the worst today. And then look at crude. Now, crude is a little bit different, but crude had a different personality today. Crude, as you can see here, is chopping around the 75 even. You can tell we had attempts to get higher, right? Get lower. We had the buyers try to push the highs here, right? They couldn't push the highs. We had the sellers trying to push the lows here. They couldn't push the lows. And of course, it gets sucked right back up down into that 75 even. Now, whenever we see price go from one big round number to the next big round number, we always know to be very concerned, because what that means is the smart money is on the sidelines. If you see markets on a slow time frame go from one trend line to the other, or go from a big round number to another big round number without any real support or resistance in the way, that should be a really big red flag. And look at this on crude here. All right, see this area right here? Right, where is this? 73. Okay, so we got 73, right? 73, and it goes all the way up, blows right through 74, all the way to 75. Are you telling me there wasn't any resistance between 73 and 75? Of course there was. But what this means is there's nobody there to provide the resistance. Okay, so when I say if we go from one trend line to the other trend line, okay, if I've got two trend lines, right? If I go from one directly up to the other and then come back down, what that means is there's nothing else in the market that is having any effect on price. And what that should tell you is it's like an empty market, right? There's not enough people in that market to do anything about that move, or else the move wouldn't happen that easily. So we know when we see this stuff, guys, this should also be another real big red flag, right? From trend line to trend line, from big round number to big round number. Be careful to keep an eye on that stuff. All right, now, we did take 5 trades today. We had 1 loss. Let's take a look at those real quick. We took 2 on crude, 3 on crude, 1 on the Russell, and 1 on the Euro. We didn't see anything on gold today. Gold was pretty much non-existent all day today. First trade of the day, though, guys, we're coming down. Short-term trend is down. I can tell that by the slope of my trigger line here. We have the low of day. There's a low of day. Okay, so we're riding the low of day down right now on crude. We're going to break below the 65s here. We'll mark up our swing low here at, of course, about 63. And then we're going to come back and bounce below that low for our breaker pattern short. Now, there were 2 possible entries. Your first entry right here, right at the 60s, and your second entry down here at the 58s. Now, I couldn't get the 60s. I'd missed it. I grabbed the 58s. Now, guys, you're okay to take a re-entry as long as you take it according to your rules. Make sure you have enough room, and make sure you avoid that chop zone. Right? You wouldn't want to jump into a re-entry if it was in the chop zone or against your rules. So make sure you guys check that out. So we took, of course, 907 before the 9:15 alarm. So this is before the U.S. Open on crude oil. 73.56 was a fill. We got our +4, 2 off at 4, 2 off at 1. That's 10 ticks or 100 USD. Not a bad way to start. Little scratch trade there for first trade of the morning here.